What's been the overall impact, Chuck, of the pandemic, both for PSCU and for the many hundreds of credit unions you serve? What have you seen as the primary impacts?
Well, great question. I think great place to start. Certainly for PSCU, we in a hurry back in middle of March had to take over 2,000 employees into a remote environment. A call center, fraud detection, a lot of areas that I wouldn't have envisioned being in that environment. We had to make that shift. And, I'm just kind of getting some financial numbers from our fiscal close last Wednesday, September 30th. And, we grew well into double digits. And with that, one of the challenging things for us has been hiring during a pandemic and then training those individuals to be ready. Our call centers are answering 22, 23 million calls a year from credit union members. And, we go to great lengths to make sure they don't know PSCU exists. We want that experience to be seamless. So it's been, just fantastic to see our team get creative and put things in place to support that. As far as credit unions are concerned, what a challenging time period, not only with what happened with branch networks and all of that, but, more specific and close to home with us with payments. There's been, and Mark, you've seen it, a dramatic shift, obviously, into the card not present space. So the online purchases have just grown dramatically. Right off the bat, there were pullbacks in all kinds of purchasing. The ones that have stuck have certainly been travel and entertainment and in-store retail. Sad to see that the, small merchants who so depend on, a lot of that face-to-face traffic have been challenged. So from a credit union standpoint, we've tried to, for 38 weeks now, provide data that keeps our credit unions informed. Year-over-year comparisons. We've broken it down to regional geographies, and then also specific down to the credit union itself. And, you're making decisions off of how interchange has shifted from credit to debit, and just overall volumes kind of being down and now showing some signs of recovery. But, Mark, I'm sure we'll get into it. It's been fascinating to watch as there were early fears and commentaries about the exchange of the virus through paper and what that's done to cash. We've seen early on 30+% reduction in ATM utilization, and we're seeing some real dents into the utilization of cash, which, for a long time, I think last time you and I were on a panel together, we talked about, that $15 to $20 transaction, 50% of that is still done in cash. So we're seeing a dramatic shift to, various new forms of payment.
Yeah, actually, Chuck, that's a great segue to another question I wanted to ask you. I was privileged back in the early summer that you were kind enough to join a series of client events I did. Gosh, that was pioneering, Chuck. That was probably the first Zoom sessions we were doing back then. And as you'll recall, we focused on the new realities. And you used an expression, I remember it, hopefully you'll remember it. You used an expression during those sessions and you said, we're entering a new normal. What does that mean for you, Chuck? And what does it mean, do you think, for our credit union friends on this session today?
I think that takes a few different forms, and I'll first start, I think in all of credit union strategic planning, certainly at ours, and Mark, you're in a number of sessions with boards and credit unions, we're thinking 2, 3, 5 years down the road, how do we get the membership more engaged in digital channels? How do we get them, bringing their deposits in electronically, getting their cash and purchasing done through the card products, and then utilizing the branch in, kind of those life-changing events, buying a house, planning for retirement, education, car purchases, those types of things. And I think we also talked, we both agreed the future is now, because as we were planning out these years, the new normal got accelerated through COVID. And I think we've seen a lot of that. And now kind of the analysis is what stays and sticks and what perhaps returns back. Is it kind of the rising tide lifts all ships where, e-commerce stays up and then in-store retail, when it recovers, sees some lifts? Or, does that block of transactions that are occurring online? And, I just see it now working from home. I don't know that my wife wanted me to see it, but the volume of packages that come to this house, how much of that stays away from in-store retail? And, I think, from a credit union standpoint, credit unions have done such an effective job over the years with the local and the community aspects of, how they approach that local scene and competition. And, I still think that small business has a special place, and especially those ties and links to credit unions. So, part of the data we're providing is, what type of purchase activity occurs with those local merchant sets, and how can credit unions through loyalty points or other means keep that community aspect alive and well.
Yeah, absolutely, Chuck. And one of the things I've noticed, and you have this fantastic vantage point because you look out on literally hundreds of credit unions at PSCU. But what I've noticed, Chuck, especially the last, I'd say 4 or 5 months, especially, the movement towards touchless interactions, which I think is a phrase I stole from you, Mr. Fagan, at a CEO.
I make up a lot of stuff, Mark.
I call them Faganisms, by the way. I call them, Chris Canary will tell you that. I call them Faganisms. But we talked about the touchless interactions. You just talked about it in the sense of cash, right, Chuck?
Yeah.
I mean, that's a classic example. And I've seen a number of clients of mine reissue their debit and credit card out of cycle. One of them, Chuck, in Minnesota, a large credit union in Minnesota, has invested more than $2 million in reissuing all the debit and credit cards that they offer. That's Affinity Plus Credit Union in Minnesota. And Dave Larson, the CEO there, said, we felt we had to do it. In speaking with clients, MasterCard, Visa, you do the same thing all the time. They're telling me that by the end of this year, they'll each have, both payment systems will each have about 300 million pieces of plastics issued individually.
Yeah.
That's a lot of plastic, Chuck. Do you see that US will now start to look more like Europe? I've got to put a European plug in, right? It's only 10 minutes in, Chuck, and I've done it. But do you think the US is going to start looking a lot like Europe in the sense of a mature contactless market?
I hope so. The two sides of it, is really the first time that, in my mind, the merchants were ahead of the issuing community in being ready. And, that started when Apple Pay really kind of hit on the scene, and then you had Samsung Pay, Android Pay, LG Pay kind of follow. Yeah. So the near field communication that works through those wallets is identical to what works with the piece of plastic. And really the barrier that we saw for the issuing side was the cost of the plastic. That near field communication antenna that was placed on the plastic, put that cost up at really an amount that was tough to justify, especially on the heels of EMV, as we followed your European movements. And, here you're 5-6 years away from having to go through the mandates from MasterCard, Visa, and that reissuance with the cost associated with EMV. And, you get a sense of how fast technology is moving now, because contactless is somewhat putting in a position again. And, Mark and I, for the group, had an opportunity to collaborate a bit. And the one thing at the very end, using Mark's expertise with his planning and kind of oversight of the whole industry, and then blending that with some of what we see in the payment space, we want to put, kind of some takeaways at the end that we can talk through that really need to be incorporated in 2021 planning. And, if the investment that Dave Larson and Affinity Plus made with us is, a pretty steep price, obviously. And if that's not feasible for a credit union, then, to me, looking at your most active users is, really necessary play, because they're going to see those types of transactions and merchants with that type of scale coming out of MasterCard and Visa, and they're going to wonder why they can't have that same experience. So, I did see a comment come across.
Yeah, from Norm at VSECU.
Yeah, I just want to clarify, and you certainly can do EMV, Euro, MasterCard, Visa is the chip that was inserted on the card that now, kind of has you dipping the card as opposed to swiping, which we had always done. And, now what we're talking about here, and I think another example where COVID has accelerated, Mark, that you just tap and go. And, MasterCard, Visa, probably, Mark, I would say 2018 started maybe with Saquon Barkley and some of the NFL commercials showing that. And it's taken off from there. And you now have, I think 75% is the latest numbers. Maybe you have more current, Mark, that merchant locations throughout the United States that are accepting near field communication. And, that's kind of mainstream.
Yeah, it's very interesting, Chuck, and thank you for catching Norm's question. You are an eagle-eyed man, Mr. Fagan. You can chew gum and walk at the same time, huh? See, I have to stop what I'm doing to look at.
I sometimes fall, though.
Well, but just to give you some additional perspective there, as you know, I was at MasterCard in '94 in the '90s, and when in '94 EMV came alive, that's when EMV was created. My goodness, Chuck, that's a long time ago. And it took a while for EMV to reach the United States, as you know, and there were all sorts of differences, right? The Europeans had high telecommunication costs, really extraordinary costs. And so every time we took a transaction online, we had to pay for that, Chuck. We had to pay the telecommunications networks, a hefty fee for that authorization request. And then fraud. Remember, this is relatively early in the stage of debit, right? 1994 was still relatively early.
Correct.
Credit had been around for years, but the fraud levels got out of control in Europe. I mean, we lost a lot of money, Chuck. I mean, billions.
Oh, yeah.
And so we needed a solution, and in 1994, chip was it. When I look at the world today, and I'd love your perspective on this, we've moved from chip to contactless chip. You mentioned a few minutes ago the wallet programs, the mobile payments programs. Can you see a world, Chuck, one day when that plastic card won't be as important in the payment process as it is today? That maybe we are using devices or biometrics, to make payment.
Yeah, it's interesting. We've done some focus group around this with consumers, and the U.S. is still a heavily dependent plastic. I mean, consumers still see it easier than the phone. So if we go that direction, I think it's going to be lagged. You see parts of the world, just listening, MasterCard, Visa, Latin America is one of the biggest opportunities both have right now. And it's because those societies have been largely cash.
Yeah.
So they don't have the infrastructure to step through that the U.S. And other parts of the world have had to step through. So I do see more adoption and more utilization through some of the stats that we've created from those digital wallets, but it's still pretty small overall, Mark. The tokenization aspect to it, I think there's a fear probably about the security of it. Having it on the phone and kind of the whole digital aspect, but the fact that the tokenization exists, and we could certainly go into explaining how that works with the algorithm on both sides being able to ultimately get back to that account number. So I think it's a number of things that we have to crack the code on in order to move all the way to the phone, because the plastic still seems to be something we like.
Absolutely. But I do want to come back to cash. I remember as I was listening to you, Chuck, it came into my head. I read a research report in the year 2000. I remember it distinctly because we were all worried about Y2K, right? So we were all,
Yeah.
we were all panicking. And I read this landmark research study. I think it was done by Boston Consulting Group. I could be misspeaking there, Chuck, but it was one of those firms. And it said we will have a cashless society by 2020.
Yeah.
And here we are, right? So,
and when I started at Virginia Credit Union, my first job out of school, 1988, Jane Watkins, who is now retired, one of my mentors, told me, we're moving towards this cashless society, even back in the late 80s.
but, here's the catch, Chuck. Here's what I think is going to happen. Contactless actually could really, really disrupt cash.
I think you combine contactless with P2P that's taking off now. And right. I agree with you that there's definitely going to be a push. And again, I'll come back to the credit union industry as a whole. One of the reasons cash will stick around is the unbanked. And, I think credit unions can certainly support and help that segment. I mean, that's, going back to foundational things that credit unions work through. That's an important segment that, either prepaid cards or cash is the way they have to transact. And it's an opportunity.
Absolutely. And, I think I left a kind of a question unanswered that you said a few minutes ago, Chuck, on the merchant acceptance network. And I was chatting just yesterday to Keith Ash at MasterCard. You probably know Keith very well.
I do.
And we were talking about the merchant acceptance base. What I understand is that 75 of the top 100 US retailers are now contactless ready, Chuck, right now. They could take contactless today. And there is a majority now of the retail base. So that means, I didn't get specific numbers, but it means more than 50% that is able to take contactless, because you made a critical point. Anywhere where we see mobile wallet acceptance, Apple Pay, etc., we essentially have a contactless network, right? As you said, it's the same technology. So I think when I put pieces together, Chuck, and that's what I try to do in my life, in my working life at least, I look at the acceptance trends and the issuing trends, and they seem to be converging. And that's a good thing, right? When we're looking to see adoption of a new technology. Are you seeing a lot of PSCU clients doing reissuance, Chuck, or are they waiting until the renewal cycle?
Well, we're seeing a lot at least get the inventory in place. There are some that have gone down the path of, reissuing credit or reissuing debit, a handful, as you referenced earlier, doing both. If that's not feasible, which is certainly understandable, because, there's definitely some uncertainties from all the CEOs I speak with, and I know you work with, about 2021, what delinquency is going to look like, all of that. So all that has to be weighed in my mind, but at least going in and identifying the most active users you have that really drive the interchange and, keep connected with the credit union, you need to get it in those hands for sure.
Yeah. And then just to put a sort of capstone on contactless, Chuck, and we'll move on. I was actually working with your alma mater last week, Chris Shockley at Virginia Credit Union. We had the strategic planning session. And one of the comments I made, which we had a healthy discussion around, was if you're a typical credit union member, a typical credit union member, not an underserved or but just an average credit union income member, you've probably got other banks or financial institutions' plastics in your wallet or purse. And if they go through a leap to contactless, they're sending you, Chuck, in the mail, your new contactless cards. And as a credit union member, maybe you start to favor those plastics because of the convenience that they offer versus the, insert or swipe versions of the same product. So it's not a question as such, it's more of an observation, that we have to be careful, I think.
I couldn't agree more, Mark. And I think it gets to, we've heard for years and years, member experience. And, another little Faganism here is I think over the last, certainly 7 months of COVID, I think we're headed in the direction of a personalized member experience, that you have to utilize the data to understand what channel the member wants to be in, and you've got to align the best experience possible with where they want to be. And, an example, and I think we'll get into digital a bit, but like the digital banking platform that we've worked on, we mail the plastic out, and old school, you have a sticker on the top and you dial 1-800. Well, hopefully you're dialing from the phone number that exists on the system so you can get authenticated through the ANI or automatic number identification. If that's not the case, you have to zero out and go through the full authentication and, get your card activated in a little bit more thorough method. We know the card hasn't been activated. So let's use the data. If the member transacts on the phone and uses mobile banking, then let's prompt the member through the next time they, get into digital banking. Would you like to activate your card now? Yes, authenticate on the phone, and it's done. And we kept the member where they wanted to be. I think that's where it's all moving, and we have to understand that.
Yeah, absolutely. And Chuck, before I continue that thread of conversation with you, I just want to let everybody know that's listening in. We're entering the sort of second half, or into the second half of our game here, Chuck, this afternoon. And if they have any questions, both of us, I think, are paying attention to the chat and Q&A boxes here on our screens. So please, but we have some very shy and retiring people, I noticed, on the participants list, Chuck. It's people like Matt Lewandowski and John Dwyer and Rob Miller and, Jeff Morse, and I could go on, Sean Gammon, all very quiet, retiring people. So we probably won't hear from them.
Right.
On that theme, though, Chuck, of authentication or activation of the card, I don't know if you can see it, but here's my Apple card, right? And I only got this, Chuck, I promise, for research purposes, not because it's a MasterCard and I'm loyal, but for research purposes. I just wanted to see what the hype was about.
Yeah.
Couple of observations, and I'd welcome your reaction to any of them. First of all, the way I authenticated this card was I took the packaging that it came in and touched it to my phone, and the card was activated. When I applied for the card originally on my phone, of course, my Apple phone, it took 28 seconds, Chuck, from the time I started applying for the card until a digital version of that card was available on my phone with a credit limit. I know you'll be shocked that someone gave me a credit line, but with a credit limit, 28 seconds. Is that the new competitive bar that we're going to have to strive for?
They changed the game with that. It is so easy. And what the challenge is, I think, for credit unions and us included in that, is pulling all the pieces together, kind of the best in breed environment that credit unions use. Hopefully PSCU for cards, and then they've got a lending origination system, a core, and it takes all pieces of that to come together for what Apple was able to create. And I think from an API perspective, we can create the landscape. Certainly, larger credit unions with the resources can take the APIs and actually build a close type of experience. For other credit unions, we kind of face a similar situation to what credit unions face. 3-4 generations of members at a credit union. My father, who's 80, he's not going to mobile phone. He still likes to visit that teller, and for all I know, he takes 20 out before lunch and deposits back after lunch. But my daughters, your daughter, they don't want to see people unless it's big events. They want to be on the phone. So PSCU has to build for the credit union that just wants to be able to take the environment, put logo and color on, and have that setting. So we can get close, but it takes all the partners kind of pulling together on that to create that right experience. Apple did change the game once again with that card. And it's interesting to follow with Venmo and Square having card products as well. Everybody's after payments. And, I think two reasons. There's income there, but secondly, the data that it represents allows those big companies, it allows credit unions to really get down to a personalized experience. And that's what everybody's after. Build deep ties.
Absolutely. And I'm going to run right through that door you opened, Chuck, on competition, because I kind of worry about that on behalf of my credit union. I'm a passionate advocate, as you know, for credit union. Venmo have this new credit card coming out, as you rightly say. They're taking their brand to the point of sale, Chuck, as a payment mechanism in terms of the person-to-person application of Venmo could actually become a phone-based payment at the point of sale application. We've got Amazon doing all sorts of interesting things in the background. We've got Apple and others. You mentioned Square that have just applied for their banking license so that they can now take deposits from those small businesses you talked about a few minutes ago, Chuck. We know payments is the single largest business by revenue in the retail space, in the consumer banking space. It's amazing to me. I don't think a lot of people truly understand that. I know you do, but if you add up all the revenue streams from payments, it's the single biggest P&L of any product we offer, which is remarkable.
Yeah.
And I think that's why so many people are focused on it. How do you think, first of all, what do you think about these competitive threats, and what should credit unions be doing more of to protect their turf? And I'll lead the witness a bit, Chuck. I heard you say at one of our meetings, easy is the new loyalty. Another Faganism. Tell me about that, and how does it play into the competitive dynamic?
Yeah, so first of all, it was, to me, no surprise Venmo went down the path they did. I mean, Venmo, hasn't made a dollar, just like a lot of those startup type organizations. So in order to build a mass client base and do it with kind of the social aspects to it, it's why that younger demographic is so loyal to Venmo. And for them now to head to that point of sale, they get to use that broad subscriber base and try and penetrate it with a card product that is going to generate income. So certainly no shock there. Like the Apple Card and looking at the Venmo card, the interest rate is certainly not credit union worthy. Right. So, I think there's certainly an advantage there. And I do think in the case of a number of these players, the credit union is still the safe, preferred place to be. But it doesn't mean that credit unions can sit still and, just rest on that. Credit unions are going to have to, obviously lean on partners, but also, create kind of a differentiator in their own space in order to keep that loyalty high. But one thing is for sure to me is that, it used to be me growing up in this industry, primary financial institution was kind of defined by the checking account. And now there's no question in my mind that, check is a payment, to your point. And, if you include that aspect, it's not out of the realm to think 60 to 70% of a credit union's income could be from the overall payments pie. So when you're thinking about that PFI relationship, I think it's broader than just checks now. It's payment devices in general. And an interesting stat, I think it's amazing still that penetration of credit cards in particular into a credit union's member base on average, there are obviously ones that excel, but you're not at 20% today. So there's still great opportunity to get that card, which is a much friendlier card. The small print is, so drastically different from these players than what credit unions offer that, there should be a push to deepen that penetration.
Right. And thanks, Chuck. And I just noticed too, we got a few comments or questions. One of them is around a credit union wallet program. As we've been talking about mobile wallets this morning or this afternoon. I'll give my take first as to whether the game is over, as our friend says in his question, for credit union mobile wallet, and then please react. I just have a sense right now, Chuck, when I look out on the industry, that programs like Zelle, P2P, programs like Apple Pay, Walmart Pay, which I believe, I'll have to check my numbers, Chuck, but the last time I checked, Walmart Pay was actually bigger than Apple Pay because, yeah, right? And it's, as you know, it's a closed loop program. In other words, it's only usable in Walmart stores. But to quote you, easy as the new loyalty, Walmart Pay is supposed to be incredibly easy because it's based on a quick response code. I've used it, on your phone, you have a QR code come up.
Yep. You
just show that to the cashier or teller, and you're done. So it's very efficient. I don't think, could be wrong, Chuck, but I don't think there's room now because we've got real giant players in this space for a credit union specific wallet program. Now, forgive me if you're building one and you haven't told me about it.
And we're not. And I agree with you. I think the phone manufacturers had the inside track to build that wallet. And, the key is to not only get the credit union card into that wallet, but also, PSCU now, and you see it with Apple, the Apple Card is, this notion of digital provisioning that, COVID kind of pushed everything into the fraudsters' playing field. The EMV chip stopped counterfeit fraud largely from, really being a factor anymore. So the fraudsters obviously went to card not present. Well, now we just brought the whole game over onto their field. And, as more and more transactions occur in that online environment, if there is a fraud situation and, sadly a member has to go through that process of getting new cards, we need to be digital provisioning right into the wallet, a new account number that's tokenized, and the credit union's card stays, top of wallet. We're doing that today. Yeah. And I think an absolute necessity. The plastic still has to come, to our previous discussion, but getting that card in the wallet is key. And, another one is PayPal. Yeah. You look at PayPal and PayPal really puts the credit union in a clearinghouse. It's an ACH transaction and you're not getting anything off of it. So to me, a credit union taking kind of a history download, see where your PayPal transactions are, and then market to those members to get your credit union debit card account into the PayPal wallet. MasterCard and Visa partnered with PayPal. PayPal had challenges getting merchant location and access. So MasterCard, Visa enabled that, but in return, PayPal agreed that financial institution or issuer cards could be placed in their wallet. And that's interchange that we're missing out on.
Absolutely. And, thanks to John Dwyer at NEFCU for that great question. And I noticed, Chuck, very much along what you're talking about now, PayPal, Venmo. Michelle Fullerton asked us a question around fraud on the Venmo Cash app. I'll kick off, Chuck, because I happen to know, well, you probably know at Harvard Employees Credit Union in Massachusetts, a PayPal executive actually sits on their board. Shahar Ziv, who's a wonderful guy, if you get a chance to meet him.
We were on a panel together.
Oh, that's right. That's right. A great guy. And to Michelle's question, and I won't say too much here in case it's already not public, but I know that PayPal is working on authentication techniques, Chuck, which may well be similar a little bit to some of the work you've been doing around the CU Ledger Member Pass initiative, and using, it's not the same as Member Pass, but it's a digital identity that we would each have that can be used inside the Venmo app. I think that's where it's going, Chuck. I think the Venmos of the world, potentially even Zelle, will look for unique digital identities to get created for you and me so that whenever we're transacting, it's clear and obvious that it's really us, you know. Anyway, your take.
I completely agree. And that, you know, when you think about Venmo, even Zelle, those are the limitations, is that once you hit send, it's gone.
It's gone.
The dispute chargeback process that exists on the MasterCard Visa rails, there's huge value in that, and that doesn't exist in that world. So as tight and as good of an authentication that they can put out, I think is the best protection you can get without that chargeback access being available.
Yeah, and you're absolutely right. It's, you know, it's a little bit like a Washington football team quarterback making a pass, Chuck. Once the ball is gone, it goes straight to the other team. You know, that was just for
Yes.
That was just for Lewandowski. You know, just to make sure he's still with us.
Knowing I'm a fan as well, yes, we
Well,
sadly do that.
I wasn't gonna say that. Um, coming back to something you said a few minutes ago, Chuck, you talked about core, you talked about lending, you talked about cards and the integration power, digital banking, and the integration power of those things. I personally believe that's where we have to spend a lot of our time and investment over the next several years, is on integration of our back offices, right? I think we've just got to deal with that. We've put up with it for a long time. I'm fascinated by your strategy at PSCU, where you've innovated around payment solutions, but you also took a huge risk, and all credit to you, Chuck, in investing in a new digital banking platform called Lumen, which I hear is going really well. I mean, can you talk a little bit about that? I know it's not a PSCU commercial today, and you're too much of a quality guy to make it one, but this integration's important. Talk about your strategy around how you see that world.
Yeah, and you know, the mobile phone is a great piece of that, and I definitely won't do the commercial thing. But what I presented to the board, March of 2015, when you know, I was CEO at Q's after having worked at PSCU for 16 years, and when I came back and had an opportunity to present to the board, that whole convergence of digital and payments. It was inevitable. You could see it from the early days of, you know, Google had a wallet that PSCU was an early pilot on. And to me, it is, you obviously being very, very familiar with the core world. I think a core decision is a 20-year decision. You know, that's one of those things, you make a decision and you get it aligned with your credit union and you kind of stick with it. I think digital banking is one of those that, you know, you almost have to look at it as a 5-year decision, that if you don't keep digital banking current, the member is going to find current access. And, you know, as I started working with a team of individuals, you know, the rule was they couldn't replicate what was out there, that I wanted a platform that, you know, you didn't have downtime for upgrades. You know, Google, you log in every day, there's something different. They're hitting it on the fly, and it's as reliable as the light switch in your house. And that's the type of access that Chase and B of A and others are building, with massive budgets to be able to do that. And, you know, we did not do it because we want to take a product public. We didn't do it for any other reason other than we thought, with the scale of PSCU and the convergence of what we did with that push to digital, that we could create an environment that was of the newest technology and created that ecosystem where everything was tightly integrated. And, you know, it's APIs. So regardless of whether a credit union works with Lumen or not, they can pull those APIs into their digital banking provider. And, it's my mindset, and I think you agree, Mark, from your days on the core side, is if we can keep the credit union employee in the core, it obviously improves training time. It keeps the member experience right as they're in front of you. They're not toggling back and forth between systems. And if we can keep the credit union member in the safe confines of the credit union's URL, then that's a big win. That we've kind of brought everything together, utilizing, again, that API technology that is a game changer. And I think credit unions can succeed in that space.
Do you think, Chuck, that part of the future of payments is more and more collaboration in the industry? Now, I think we discussed the wallet idea, and we both of us kind of dismissed that a little bit, but broader collaboration through a QSO like yours, are you a recipe for the survival of smaller credit unions, Chuck? Do you see it that way?
I certainly hope we can be a factor in that. When I came in the industry, there were well over 10,000 credit unions, and you have spoken to our board and made a prediction between this decade, as we look out to the end of the decade, quoting you, that the number of credit unions will start with a 2.
Yeah.
So, there absolutely is a need for scale, but I think organizations like PSCU, that's what we were founded on. And today we've certainly expanded from that. But if I look at kind of the 5 pillars of our strategic plan, as you worked with us, mobile, digital, data, fraud, security. I always want to train and develop our people, but that 5th bucket, really focusing in on growth and scale. I don't want to grow for the sake of growing, and I don't want to create organizational fatigue, but we constantly have to grow so that we can provide the scale back to the credit union industry.
Absolutely. And again, Chuck, you opened another door for me around fraud and security. You know more than me about this, because I think you see a lot more credit unions every day of your life than I do. But I'm hearing that fraud and security challenges and threats are just unprecedented this year. Can you talk a little bit about what you've seen around fraud and risk, and perhaps what PSCU has done, not only as far as you can talk about it, Chuck? I know some of these topics are highly confidential. What you've done to protect PSCU and protect your credit unions. Is it as bad out there as I'm hearing in terms of the threats?
It is as bad, and it's probably worse than either one of us would be willing to commit to. When I think of the fraud and security, it's easy to kind of zone in on the cardholder side, and we go to great lengths there. I mean, we've built an in-house tool called linked analysis, and when we look at the various aspects of our business as it relates to touching a member, touch points of the call center, of the card products, of the electronic bill pay and presentment, and of the digital banking side. If there's a fraud attempt, an account takeover attempt through our call center, then I want to know and recognize that IP address and be able to use it on the card side, be able to use it on the digital banking side. So kind of linking all that aspect. The next step is to really link back to the credit union, who has a branch channel, processes checks, has their own call center. So being able to link all that together, I think, has to occur. And then, there's the whole cyber aspect. I think we're going to be in the neighborhood of 4.5 billion transactions as we look out over this fiscal year. And obviously with 38 million accounts and that much transaction activity, there is wealth in that data that we have. And, in our member experience center that you've been in, we have a tabletop that has a globe of the world. Yeah. And it shows the nonstop real-time cyber attacks that are hitting our system and where they're originating. And it's fascinating to see the volume increase and grow. You know, I haven't seen it, obviously, because we haven't been in the office, but it's amazing.
You've had to channel more investment into protecting the environment, right? The payments environment.
Yeah, I haven't been brave enough to say no to my cyber people yet. And then on the cardholder side, you know, it's a new report card every day for that team. You know, you're never going to win. You're just trying to fight off and stay a couple of steps ahead. So it's investing in the right people, it's training, and it's also having the tools and technologies. And then I'll add, it takes work on the credit union's part too. You know,
Right.
certainly in the channels that they have, but even on the cardholder side, it really has to be a partnership to work together to get that done.
And it's education too, Chuck, isn't it, on the cardholder side? I remember in my MasterCard days, we used to have a lot of fraud get created because people had written their PIN numbers on the back of their plastic cards. I mean, this is, they actually had done it. I mean, you know, it's a little bit like when I was to keep all my passwords under my keyboard, you know, which is not what you should do, right? But we know that goes on. Before we kind of get to your closing remarks, Chuck, and I'd love if you, while I'm talking, if you could think about what are the 5 things, what are the 5 takeaways Chuck Fagan wants to have everyone take with them this afternoon. And while you're thinking about that, sorry to put you on the spot, Chuck, but my view of the future of payments is that we're going to see a rapid migration toward all forms of electronic and contactless payment. You know, you would say touchless payment, whether that's wallet, whether it's contactless, whether it's biometric, Chuck, later this decade, where we might actually pay with our palm print. Like I could now do it at an Amazon Go store, right? I could actually do that today. If I found an Amazon store, I could pay with my palm print. I think the competitive landscape is going to be very different too. We're going to have a lot of challenges as you described it. And I think we have to fall back on demonstrating our ability to use data and data analytics to prove to our members that we really know who they are and what makes them want to do business with us, and rewarding that, because, you know, we didn't get time today to talk about rewards, but how we reward that relationship. And then from a processing and efficiency perspective, more and more investment in sorting out the friction that gets created in our back offices that shows itself in the member experience, you know. So those are some of my thoughts, Chuck. In the couple of minutes we have left, what are your 5 takeaways for everyone today? And if it's not 5, Chuck, it doesn't matter, but what are the takeaways for you?
So if I'm sitting with a credit union in a strategic planning session specific to the payments bucket, I'm thinking how I accelerate contactless. We've spent quite a bit of time on that. If I can't do the mass reissue, which, you know, absolutely could be understood, I need to have the inventory in place so that my new accounts, my reissues are getting a contactless card. And then I do a search or, you know, go to the processor that the credit union uses, and let's identify our top 1,000 users, whatever it is, and let's get those cards in their hands. I think that's one. Mitigating fraud, it's not going to slow down. A Faganism, the fraudsters are not willing to take pay cuts. They are having their own virtual meetings right now, and you know, when we're in face-to-face and we're at the nice hotels in Washington, D.C., they're right down the street in other nice hotels. I mean, they look at it as a business. Data that you just talked about, I think, is also key, that we've got to get from, you know, studying the data, knowing that we have the data, and converting it into executable strategies. We have to crack the code on that personalized aspect. So I think that's key. Think digital first. Yeah, my father is still a valuable member, but as we build technology, as we create the environment, I just think from a pure efficiency standpoint, we need to really focus on that model of getting deposits in electronically, getting the cash and the utilization out through the cards and payment means, and then, you know, figure out how to connect with the member at the right level in the branch system, because there's obviously still value in that branch system. I mean, one of the things we're seeing is certainly a drop off in new credit union members. And I think that's because the top channel for that has always been the branch network. So, you know, we've got to figure that out. And then I'd say the fifth one, Mark, is as we think about 2021, delinquency is going to be something that we have to prepare for. In some of our work, you know, we're seeing credit union credit card delinquency in that 1.5% range, you know, which a Capital One or any of those big guys would give anything for, but it would mean they're probably lending too conservatively. So as we look next year, it's not out of the realm to think, you know, it could double and get into some higher numbers. So be prepared for delinquency, manage that closely. And then I'll add a bonus, Mark, just outside of the card area. My time at Q's, you know, when we were dealing with the financial crisis in 2008 and the subsequent years afterwards, to me, the credit unions that I saw accelerate through that were the ones that, you know, for 16 years at PSCU, we made our tough budget decisions, cut training. I think it's the time to kind of double down on training, make the push and develop people. And that's going to hopefully allow for some acceleration out of COVID whenever it ultimately does subside.
Well, you exceeded expectations again, Mr. Fagan. You're 20% over budget with your takeaways, you know. Thank you for the 6. Shout out to our good friend, Sean Gammon, who said this was far more interesting than the VP debate last night. So thank you, Sean. We appreciate that. I'm not sure how high that bar was set for us, Chuck, you know, based on last night, but I can tell you that a fly did not land on you at any point during this session, you know, because I would have told you. Chuck, it's just been fantastic. I could talk to you all afternoon. It feels like I'm sat in my armchair here talking to a good friend. Thanks for the insights, Chuck, and thanks for all that you and PSCU do for the movement. Really appreciate you. Mr. Bergeron, if you're still out there, sir, we're going to hand the baton back to you. Yeah, you can't fire us for being a few minutes late, Joe, because we started a few minutes late.
No, I'm sure everybody on the line would be more than happy to let you continue on at length a bit longer. And thank you, Mark, and thank you, Chuck, for spending the time with us this afternoon. It has been great. I'm seeing great comments from people in the chat box about hearing this discussion. I think it was great that although we didn't have a fireplace for our fireside chat, that it was informal the way it is, and it's just, you know, great to hear the two of you just having casual conversation, sharing the wealth of knowledge that you both bring to credit unions. And so it's just great. And we especially appreciate, Chuck, again, PSCU's sponsorship of our events this afternoon and the new business relationship that we're about to enter together.